Alrighty. I started the recording, so just a heads up for anyone in the Discord. We are being recorded, so to speak. Well, if you're joining on the Discord, you know why you're here. This is our weekly kind of TA update stream. And, for those who cannot make it, we will be offering this recording. So, just as kind of a preface for the recording, that's what this is. This is kind of a spin off or a build off of the, strictly videos that we used to make. Usually on Sundays, once a week, where naming myself because I am a higher time frame swing trader, kind of check in with the markets, usually on a Sunday, and, kind of do my analysis for the week. And, this is my way of kind of sharing that experience or what I go through with all of you. I used to do this as a recording, but, that didn't necessarily allow for as much interaction or kind of on the go learning. So we're kind of experimenting with making this a live stream. So, a couple different kind of things to expect is, from myself, like this is, me kind of speaking, off the cuff, like I'm just going to be sharing things with you as I see them. With a recording, I might be able to go through a couple of variations or, kind of take my time to plan it out. Whereas with these live streams, it is really one take. This is, my first view of the markets and my first opinion. So it is really like raw in a sense. And then the second thing, is it allows for a little bit more interaction. So if, there's certain questions that come up throughout the analysis, or if we want to have a discussion around, maybe someone else has a different opinion or a different take, that's more than welcome because there are a lot of different schools of thought when it comes to technical analysis. And that's what we're really trying to foster here at Onward BTC is kind of a collaborative learning environment where it's not just me, Christian, kind of driving the ship. We want the community to really be more active and kind of learn from each other, learn from us, and kind of learn together and, hopefully kind of brave through these markets and ultimately kind of succeed together. So that's my little spiel. If you're watching the recording, obviously this is, me, Mikas from Onward BTC. I'm one of the technical analysts here, more so of a swing trader focusing on the higher time frames, especially after COVID. I did a little bit of scalping throughout COVID, but we're moving past that now. So most of my trading takes place on the on the daily, the weekly, the 12-hour, mainly the daily, and my positions take weeks sometimes to play out. 1 to 2 weeks usually. So yeah, that's kind of what to expect from my analysis. It updates weekly, but ultimately it might take a couple weeks for a hypothesis to play out. So, kind of building off of last week's live stream update and the trade that we actually entered, which was a swing long, is based off of this hypothesis, right? Which is based off of the previous kind of short that we managed to catch, and this entire kind of market area or scenario is covered in those pre-recordings, which I think are available on Onward BTC's YouTube. So if you want to go check out how we managed to catch this short and kind of a hypothesis for why we were considering a long at a sort of a breakout after a consolidation period on the second bottom, make sure to kind of check that out. I'll give you a hint. It has to do with a double bottoming structure. But that's already covered. Make sure to check that out if you're interested. But we're kind of focusing more so on what has happened since the last video or the last live stream that we did on Sunday of last week. So we were kind of predicting, or I had hypothesized that we might have a little bit of an extended relief rally, especially because we started getting this kind of breakout after a very tight consolidation period, coming kind of going from September all the way through the end of October. So essentially almost a month of straight really tight range trading, which was also portrayed in the Bollinger Bands. As you can see, the Bollinger Bands kept on contracting and they got really tight, and this is usually called a volatility squeeze. And when you have a squeeze in volatility, the markets eventually do have to break to one side or the other. This is technically breakout trading, which is inherently a lot riskier just because of kind of like the liquidity games that whales really like to play with breakout trading, because a lot of newer traders, that's usually the first thing you really learn in technical analysis, is trying to trade a breakout, right? So inherently breakout trades are a little bit more risky. So this was a little bit riskier of a trade because it was a breakout. That's what we played, as well as the fact that it is a counter trend play in the sense that it is against the macro trend, because the macro trend is to the downside. So kind of, a double risk position or trade, if you will, which should inform your risk management, namely in the amount of risk that you would allocate to this position. So for example, for myself, I allocated half the amount of risk I would usually allocate to a counter trend play like this. So I went in with 2.5%, I believe, or I think it was a smaller account, so it might have been 5%, but strictly I would have probably used half risk or even a quarter risk. Yep. And then, I kind of posted two signals. One was after this first breakout candle, we were trying to catch a retest of the 55 and the 21 EMA. Obviously, that retest didn't happen. We pumped higher, so I canceled that, and we posted a second signal, which is, I guess, a little bit more technical because it was playing off of these black lines, these black horizontals, which are ultimately PA levels. These are kind of marked from our initial kind of floor from the first bottom, so pretty significant. They acted as support or an area of catchment. Essentially, it caught the knife falling over here, and then it acted as a little bit of a resistance here, and it acted as resistance here, resistance again, and we finally were able to flip that resistance with this breakout and retest it as support, and we are now pumping off of that area. So this is a successful kind of bullish retest. So we actually entered the position relatively early on. Right after this pump, this wick actually perfectly tapped that lower horizontal, and we were kind of in with the classic, I would say, entries of our position. We had two DCA orders. We had a DCA order at the 55 and the 21 EMA. When the signal was posted, right? So that was, I think, around here. So obviously those entries were not hit. However, if you had dynamic entries and those were still your DCA orders, you would have tapped them as well. So you would have been in with 100% of your position. We are a little bit limited with Cornix because we are not able to, make those kind of dynamic entries. Obviously, these horizontal rays are static entries, so they're a lot easier to program and to actually put into a bot, whereas it's not really a bot. It's us manually inputting the numbers, and then the bot just executes it. Whereas with these more dynamic entries, that's not really possible for us to do at this time. Anyway, that is where we entered our position. We talked about some risk. Actually, we kind of went over the economic calendar as well, and we know that the Fed was having a meeting, I think, on Wednesday or Thursday. I think it was Wednesday of last week, where their new interest rate decision was coming out, and as predicted, it was the highest interest rate bump since we've had. Fortunately, and this is kind of a little bit of a conundrum, is it did have an impact on the traditional market. So kind of jumping into the S&P, and if you've been around for long enough, you know that obviously Bitcoin is kind of my priority and is what I trade the most, but we can get a lot of information and kind of confluence, if you will, kind of secondary data from, traditional markets, and namely kind of keeping track of the indices. I mostly keep track of the S&P. Obviously, you can do the NASDAQ and the Dow Jones as well, but I kind of go with the S&P, and then also the dollar. So those are my main two alternative markets to keep track of, because they do have, in the case of S&P, a direct relationship with Bitcoin, whereas with the dollar, it usually has an inverse relationship with Bitcoin, right? So going back to the S&P and going back to Wednesday with the interest rate decision, we can see that it did generate a sell-off, which is kind of expected, to be quite honest. Interest rate decisions always kind of put a little bit of fear into the market, and it was the highest one. So this was kind of expected to happen, in all honesty, and that was kind of what my warning was about on Sunday of last week. Interestingly, we didn't see as extreme of a reaction on Bitcoin. So this is now where you're getting a little bit of that decoupling. Obviously, it's directional, it's not exclusive, and what I mean by that is I'll try and find a video of someone that actually did a study on this, but there are periods when the traditional market, the equities market, and Bitcoin are highly correlated, and then there's periods of times when they don't necessarily decouple, but their relationship is less direct and loosened. So, in this case, in the S&P, where we dropped through the 55 and the 21 EMA, which is actually now turned back into significant resistance, as kind of we've seen it act as resistance here before we pump through it. On Bitcoin, we did not. We kind of slowly, I mean, I wouldn't even call this impulsive, right? On the S&P, this is very impulsive. We have bearish engulfing candles here, whereas on Bitcoin, it was very kind of, it was very soft. It was very nice to us, and it actually got us a perfect retest of the 21 and 55 daily EMAs, off of which we also pumped, which is a nice little bit of a contrast, because the reason why we pump so hard on Bitcoin is literally this wick, is the recovery the S&P made had a much more direct impact on Bitcoin and actually managed to pump us kind of above our local range high. So, very interesting relationship. We're seeing a little bit of that decoupling. I have to do a little bit more research on my end to kind of, investigate how that could be helpful to us, especially kind of moving forward. What does that mean in terms of market cycles and stuff like that? So, I still need to do a little bit more research to be a little bit more confident on that. I'm going to try and find that video I found once that I watched and share it with you guys, because Bitcoin does go through its market cycles, and it's actually very interesting how it relates to other markets as well. Okay, but kind of that aside, that was kind of covering how fundamental news from last week did impact the markets, and how the impact is a little bit different between traditional and Bitcoin. I thought that was just like an interesting point and a good thing to follow up on, because that was kind of the main takeaway from the live stream yesterday was, be wary of the Fed interest rate hike. Like, it might have impact on markets. If you're trading traditionals, obviously it did. If you're trading crypto, Bitcoin namely, not too much, which, I would say, were we lucky? I don't know if I would call it lucky, but, we held, we didn't move our stop losses. We tightened them a little bit, but we didn't move them to entry. So, it was well deserved, and we've kind of seen the fruits of our iron hands, I guess you can say, where we've cashed in profits on all three of our swing longs right now, and now we're waiting to see what's going to happen next. And I guess that's where we're kind of going to move now. Is we went over what we talked about last week. We've confirmed, or we went over that play, and now we're going to start looking a little bit forward, what could be happening through kind of the next week. So as we can see, obviously we've put in a little bit of a local higher high. In terms of oscillators, we kind of are in bearish divergence territory, just because I guess RSI is almost, well, not necessarily, right? We need to start printing higher highs on the oscillators in order to avoid bearish divergence. MACD is still pretty far off, right? Where this is clearly lower than here, right? This what is this? 116, 117, whatever you want to call it, is relatively lower than, a lot lower than 200. So, we do need to see kind of momentum continue to push through, especially on the oscillators, in order to avoid bearish divergence. Kind of a similar scenario here on RSI, except it's a lot closer. It's only like probably like 0.5 of a tick here. But either way, we need to see a little bit more momentum come through in order to kind of avoid bearish divergence on the oscillators. In terms of MACD, we are not seeing weakening, momentum yet. We haven't put in a light green kind of weakening momentum bar yet. So still hopeful, this is just something to start keeping an eye on, because once this is kind of confirmed, then I would, kind of look to start maybe closing the rest of my longs, even though they haven't necessarily hit their TPs just yet. But until that, we're going to still hold. We will talk about risk management in a little bit. I would probably recommend tightening stop losses at this point. However, brewing bearish divergence is something to keep in mind for, and that might ultimately play into maybe a short eventually. But kind of on the topic of this, kind of looking forward to, scenario is, what do we expect in the future? Just like a couple of videos ago, I said that, Bitcoin really likes to double bottom. Bitcoin also really likes to triple top, is what I like to call it. Something like here, where we see, we see kind of a first drive, pullback, second drive, pullback, third drive, before having an ultimate sort of reversal here, and kind of going then once again kind of continuing with the macro trend. This is just the most recent example. This has happened. I've just seen it a lot, so it's just something to be wary of. And that's kind of what I have mapped out here. Obviously, this is contingent. This could turn around. A lot of people hear about double tops. That's usually kind of the more popular topping I guess pattern that a lot of people see in trade. However, it's become so common that it usually can be a trap if whales are involved. So that's why the triple top I find it has a little bit higher of a success rate. However, not to say that that's totally invalid, but you know you know regardless, either way, I kind of expect a little bit maybe of a pullback. Obviously, ideally we continue pumping. That would be great. However, and that would kind of continue towards our take profits, which would be ideal. That's kind of best case scenario. But I always like being, a little bit more contractarian. I like to expect sort of, I guess, the unexpected. I don't like being fueled by hopium. So, if we do run out of steam here temporarily, which is really dependent, I guess, on weekly closure today, maybe that'll generate some bullish pressure because we are putting in a third bullish weekly candle. So if we get a successful close here, maybe that'll spark some more momentum to the upside, which will push us, even further. That would be great. However, if we do kind of slow down and run out of steam at this point, I do kind of expect another bullish retest of our kind of previous local high here, around 20.8K. I think it would be really important to kind of hold this on the daily. If we start closing below this high on the daily, so really below 20.8K, let's call it, then I would be a little bit more inclined to calling this a successful double top. I wouldn't close my position necessarily, but I would kind of pull my stop loss tighter, and if we actually do close below the 21 and 55 EMA, then I would close the rest of my long. So this is kind of an invalidation criteria or a warning criteria, I would say. If we close below 20.8K on the daily, I don't want to call it nervous, but I would get more vigilant, right? I would start, checking the charts a little bit more often to see how the market's going to react. Best case scenario is bullish weekly closure, injects more bullish pressure in the market. We kind of pump towards those next TPs. I guess the sort of weary, sort of in-between scenario is we run out of steam, we come down for a bullish retest, successful bullish retest at 20.8K, into which we get a third sort of rally, or, a third rally, I would call it, a third mini rally, right? Worst case scenario is we absolutely dump and we close below the 21 and 55 EMA, at which point I would look to absolutely, definitely close my longs, and then potentially, if possible, catch a quick swing to the range lows. But we'll deal with that when we get there. Those are just three possible market scenarios that I kind of have in mind moving into next week. But yeah, I think ultimately, if we do get the middle scenario and we go in for a third pump, we'd probably pump to around 20.4K, kind of sweep liquidity that's in this area. We can kind of hop over to the USDT chart here. So, we've tapped our first dashed or dotted kind of resistance area perfectly, actually. I can't believe we wicked there. So that was our TP1, which is actually great. I love it when this happens. Now we have an additional level at about 20.8K, which is kind of an intermediate level. That's why I didn't put it on this chart. I put it on this chart. So that's more of an immediate day-to-day level to kind of keep track of. But ultimately, I think if that retest is successful, we'll probably push further to that 22.5, maybe a little bit more conservative, 22.4K region, and sweep liquidity there. And I think that would be pretty sort of satisfactory for a third wave. And at that point, we'd probably close, I think, what is this? Well, yeah, we'd have closed half of our position in, that's our second out of 4 TP, so we would have closed 50% of the position already. And, best case scenario, again, keeping those 3 scenarios in mind, is we pump all the way to our range highs. But for that to happen, we would really kind of need some strong driving fundamental kind of market news, and we'll kind of have a look at the other markets as well, the S&P and the dollar, to see if we can get any sort of indication from those markets to see which of these three scenarios might play out. But ultimately, if we do sweep 22.4 or 22.6, that kind of region, and we confirm a local top there, and it looks, and we have some good confluence, maybe with some like bearish divergence on the RSI and MACD or something like that, then I would kind of, look for a little bit more of a swing short. I would look to close the rest of the long and probably go short. But, we'll deal with it when we get there. So again, just keeping those three market scenarios in mind, just to make it extremely clear, is best case scenario is we have a very strong weekly closure, and we kind of continue to pump to that 22.7K region, the 21 weekly EMA, where we would definitely face resistance, right? Like, this is a pretty significant level, and it's in confluence with, an important liquidity area, as it is kind of this local sort of, or even, a little bit more macro range high area. So there is definitely a liquidity pool sitting up here. So that's definitely an area of resistance. So probably take a pause there, but ultimately, ideally, best bullish case scenario is we pump towards 24K. Maybe even sweep our kind of consolidation range highs. But that's absolute best case scenario, right? Our sort of like our gray area scenario is we, run out of steam a little bit here, go in for a bullish retest of the 20.8K, and then get a third drive probably to a similar level, either 22.4K, that local sort of resistance area due to, local levels. There's probably a decent amount of liquidity there, as well as the 21 EMA on the weekly is also right sort of around there. So I'd say this is kind of the most likely scenario if I had to, put my probabilities on something, or if I had to bet on something, I'd say this is probably the most likely scenario, because that would tick a lot of my boxes. It would definitely confirm a three drive pattern, after which, we would look for market exhaustion or something like that. Whereas worst case scenario for the bulls, probably best case scenario for the bears, is that we have some bad news come through on other markets, or just in general, we kind of dump through, and we first of all, we close below 20.8K. That's a pretty important level. But more importantly, if we start closing below the 21 and the 55 EMA, that really is the danger zone for the bulls. I would definitely close my longs for sure, and maybe look to pivot short, depending what kind of if there really is a trade there, if the risk to the reward ratio is there, but no pressure really. So yeah, those are the three market scenarios to kind of keep in mind. Let's hop into the S&P really quick. So again, we kind of went over some of the news events that drove this sort of wicking around, but ultimately, kind of like big picture is we are below the 21 and the 55 EMA again. As you'll notice, these are not as clean levels as they are in Bitcoin and kind of crypto markets. Neither on the futures really, because you'll sometimes get deviations away from them, which is fair because, in traditional markets, people do tend to use, not exponential moving averages, but moving averages, which are a little bit slower. So, I'm not going to change them right now because I'd have to pull in another indicator, but it would be an interesting study to see if the, 21 and the 55 MA, not the EMA, maybe have a little bit more confluence, because the exponential ones are weighed a little bit more to recent kind of market movements, because just because crypto is like a 24/7 market that works, is just continuous. But either way, we have closed below the 21 and the 55 EMA, which is a little bit concerning. That does mean we're kind of more so in bearish territory than we are in bullish territory. So although we had kind of a strong recovery on Friday, ultimately this doesn't look very strong. We're still kind of in bearish territory. We pumped into our local resistance, and we did kind of get a rejection from it even after this, miraculous sort of pump over here. So I would say S&P and traditional markets are definitely seesawing right now, but they are sort of leaning a little bit more bearish than they are bullish, which means, that probably has a little bit more of a sort of bearish bias for crypto. I mean, for Bitcoin, and then for crypto by relation. Same kind of scenario on futures here. Nasdaq, even more so, like a little bit less of a recovery, but maybe it'll get a little bit of extended rally into this 2155 EMA region, but still bearish bias, right? Yeah, futures, okay, pumped into the 200, so we're now below the 200 simple moving average, which once again, a little bit bearish bias. Maybe we fall a little bit lower into that 2155 EMA, but regardless, sort of, bearish bias. So I guess this is kind of the very interesting piece of news here. Is like we were looking at the dollar, and I think when we were talking about the dollar last week, we were saying that it was interesting how we kind of looked at the last 3 times that we came into this 2155 kind of EMA support region. Namely also, the last time we were sort of here when we faked out below the 55 EMA and were able to kind of close within the 21 and 55 EMA again, kind of led to a little bit of a relief rally. I'd say not even a relief rally. It kind of started another impulsive sort of rally to the upside. Interestingly, we see exactly that happen again, right? I think this is literally when we talked about it, was the 22nd of October, or no, I don't know. We were talking about this, somewhere around here where we were having that fake out and we were kind of teasing a recovery. So, history doesn't fail. This is why technical analysis works, is we did get a fake out below the 55 EMA and we reclaimed it, and it did start a sort of, a rally, if you will. However, on Friday, we can see this huge bearish impulsive, like bearish engulfing candle. So this is, from a candle perspective, this is a very impulsive move. This is a very bearishly impulsive move, which I guess is kind of the saving grace, right? Because from what we just talked about on the S&P, this is looking kind of bearish, which has a sort of direct relationship to Bitcoin. Obviously, most immediately, the candle, I guess, looks neutral, but has a bullish bias just because it has has a longer wick to the downside than it does to the upside. However, we are pumping into resistance, so it'll be a lot harder for the bulls to kind of overcome this territory. So bearish kind of bias or bearish impact on Bitcoin, whereas on the dollar, we have a very strong kind of bearish move, sorry. We have a strong bearish engulfing candle here, which we know has an inverse relationship to what's going on Bitcoin. So, it'll be interesting to see which one, I guess, indicates more or has a little bit more impact on Bitcoin moving into this next week. And that's something that I will be keeping an eye out, and we'll definitely cover in kind of next week's video to kind of follow up on this point and this kind of question or thing to keep out for the next week, and see how it really impacted crypto, or the market that we're most interested in. So there's not really much to say here. Is if technicals kind of continue, is obviously we're still above that 55 EMA, so maybe there's a chance we put in like a little bit of a doji here on Monday or something and then reverse. However, this is a very strong bearish move, which means it should have kind of bullish bias for Bitcoin. So not really too much to say here. I really hope the dollar kind of takes precedent here, because if we can dump on the dollar, that would probably mean Bitcoin rallies, and we can kind of hit some more of our TPs on the longs. However, it's very hard to say here what's going to happen. If we would have closed this strongly below the 55 EMA, I would have been a little bit more inclined to say that that would have more bullish impact on Bitcoin. But the fact that we're still kind of above it makes it hard to say, because we've seen fake outs like this before. So until we can get probably a double closure, or I guess 3 candles closure, if we can close 3 candles below the 55 EMA, I would be more inclined to say that is probably a little bit more sustained of a breakdown for the dollar, which would have bullish impact on Bitcoin. So, but we're not there yet. This is definitely something to keep in mind and a point of interest for me to keep track of over the next week, and is definitely something I want to circle back to when we kind of come back for the stream next week. I guess yeah, I mean, that kind of does it for the market overview. I usually only cover Bitcoin, S&P, and the dollar on these videos. So yeah, let me know what you thought. I'm gonna end the recording here, and I'm gonna open it up to questions. I'm not gonna record the questions, obviously. So if you're interested in kind of, or you have any questions, feel free to kind of put it in the comments if you're watching this on YouTube, or we recommend that you join the Discord because we can have a more direct dialogue with you, and we can answer any kind of follow-up questions. So please feel free to check us out, join our Discord, and yeah, I'll see you guys next week. Safe trading, everyone.